Everyone, it's 9th of November 2025, and as is always the case, never quite know what we're going to be talking about in any of these sessions. These are open to everybody, novice and expert alike, so some weeks we'll talk about blockchain, DeFi, NFTs, ICOs, FCOs, TGEs, three-letter acronyms of all sorts of varieties, really. We also discuss central bank digital currencies, stablecoins, the impact of AI and the metaverse, probably a few other topics as well. Anyway, hope you find something of interest in this. Do come and join us in a future event. There's a link in the comment section below that tells you how to do that. But meanwhile, let's see who's going to come and join us today. Stuart, good morning. Anything new happening then?
Not really. Everything's quiet. The Bitcoin people are, looking at things, and the Fed is playing silly.
Mm-hmm.
You've got large, ETFs out there. Market's quiet.
Okay, yeah. And we've just been joined by Raymond as well. Hello, Raymond. And Raymond's doing the classic thing of speaking while on mute.
Yeah, sorry, I saw that. Evening. I've been recommended to join the group, so this is my first time.
Excellent. Well, thanks for joining. Got Stuart on from the States and I'm in the UK. Never quite know how many people are going to show up. Probably doesn't help that I inadvertently locked the meeting closed before as well, so we're good now. So what's your kind of interest, Raymond?
Well, I have been recommended by a good friend who I've worked with for many, many years out the capital markets banking world. And I'm a risk officer. I'm currently working for a company that's actually in a wind down. Started off in the carbon credit market, and my interest is digital. And I was approached to join them to create a digital exchange, digital payment service vehicle, maybe one day a digital bank. So I thought I need to broaden my knowledge to get back into the market, as it were.
Okay.
So I was recommended to come on. So at the moment, I class myself as a pupil.
Excellent. Okay. Well, I think we're all always learning with this crypto space and blockchain space and everything. And certainly, I think, if nothing else, I've learned about how little I know about this entire thing, even though I've actually been in this space for about 12 years, I would guess now, thereabouts.
Right.
And you're only 25, right?
Yeah. This is what happens when you've been into crypto for more than 5 years. You
Great.
kind of age somewhat rapidly. Yeah. So it's interesting, Roman, you mentioned things like the markets on, was it carbon credit? You were saying carbon credit trading, yeah. So I used to work for a commodities trader when we were actually involved in carbon credits when they first launched them. So that must have been about 15 years ago when they had the first attempt at that, which I found fascinating because it made me appreciate that whilst the market was intended for the purpose of reducing emissions, as soon as you create a market and introduce a financial incentive, companies will work out how to utilize that rather than actually reducing carbon emissions. So interesting stuff. So thanks for joining us.
For me, it was interesting, but it was just the precursor to the digital exchange taking on digital assets as a group. And then obviously digital payments, where we're seeing now the explosion of potential stablecoin transactions. So I viewed the European head. So I came into a world where there's a CEO overall globally, state-based, and the European structure was being built to be the model of rollout across the world. My first observation was that the regulatory development, which I'm well aware of from my trading and compliance days, from the TradFi world, is slow at best and erratic. But in the digital market, one could argue when I joined my company, it was at a snail's pace.
Okay.
And then obviously there was the crypto winter, but the reality is that's all changed with Trump. And obviously you've got market leaders anyway, with the UAE probably forging ahead to create a new world for everybody. So
I think you're right.
it was very exciting times, but a few things went wrong, driven by carbon and Mr. Trump and funding.
So I'll quickly throw something in because people don't always realize these sessions are recorded, by the way. So we do put them up on YouTube. So you're welcome to check previous editions, that kind of thing. What it does mean is if you do say anything that you don't want to share, just let me know first and I can edit it out. I occasionally get it where people a week or so later after I've published it say, oh, can you just edit that, everything that I said out? And it's like, well, it's a little bit difficult to do that. But, I've realised some people are going to be sensitive to some things. So just be mindful of that.
Yeah, I wouldn't mention names, but okay. I think I've been fairly generic about the market.
Excellent, that's good. And it's interesting as well, because Stuart was talking about the US market a moment ago as well. And I noticed Bitcoin, as an example, today has gone up, I think it's $2,000 or $3,000, which in the world of crypto is not that dramatic these days, to have a 3% in 12 hours. But that seems to be being attributed to Trump's latest comments about tariffs, bizarrely. And I begin to think that we're seeing this thing of there's a lot of correlation between things, but that doesn't actually mean there's true causation between them. And I think people are beginning to say things like, oh, Trump said this and the Bitcoin price went to this, blah, blah, blah. So I'm never convinced by any of this. So I've been joined by Elena as well. So Stuart and Elena are regulars on this. Elena's based out in Ireland and is an incredibly knowledgeable person about many things, including the metaverse. She's my resident expert on that, I think.
Right.
Hi all. I wouldn't hurry with the words incredibly knowledgeable. I mainly come here to listen and learn.
Elena, you must have learned by now that it's all relative. And if you just know a little bit more than something than other people, that immediately makes you a world-leading expert. So stick with it and go for it. So Raymond, are you UK-based, I presume, then?
Yeah, I'm in London.
Okay, cool.
Yeah. Raymond, feel free to ask any questions. If you think they're dumb questions, we've got dumb answers.
Well, as I said, I'm the pupil, so class me as the idiot. I come from the TradFi world with a lot of experience in product and regulation and risk, financial crime, market risk, liquidity, etc. But in the digital world, I get it. It's just not going fast enough, in my view. But
it's interesting as well. You've got this whole thing about regulation, about does regulation enable a market to develop or does it delay it and constrain it?
From my experience, it ultimately is an enabler because it creates a foundation and hopefully a common platform. But I'm old enough and wise enough to know that the regulators are significantly behind the market, and so it does slow progress because innovators just go at their speed, as it were. Yep. Regulatory papers take a long time to be created, then published, then reviewed, and then you've got this back and forth of commentary and debate. And it's not an easy process. It's not a quick process. And then, of course, you've got to go and actually publish regulation. I think the one thing that I've learned recently through conferences and speaking to colleagues and working in this space is I think the subtle difference right now between the established markets of TradFi and what we're seeing in DeFi and crypto, etc., is that nothing happens without collaboration. And I think the regulators probably will have to collaborate more. And you're starting to see that.
Well, it's interesting because I've been involved in a couple of the FCA used to run innovation sandbox schemes where they'd give the opportunity for companies and startups to kind of push the boundaries a little bit on regulation to try and tease out and explore some of the nuances. And it was interesting at one point that the FCA, along with a number of other international regulators like HKMA from Hong Kong, monetary authorities, Singapore, and several others, they actually established, I think it was an international sandbox where they could start sharing some ideas on that. So I think you're right. There's a need to be international on that. The other thing as well with DeFi and with crypto is it's kind of non-jurisdictional in that it's pervasive. It's all around the world, which means you've got the additional problem that some people think that means it's not regulated anywhere, whereas the reality is it means it's probably regulated everywhere. It's just that you don't realize that you're breaking the regulations. And I've seen that a number of times on some projects where people have said, oh yeah, well, we're going to register in Panama or Malta or whatever, because then we don't get affected by the regulations. And it's like, well, it's actually where your customers are. It's where your investors are that the regulation applies. And they didn't always realize that. So yeah, interesting stuff.
It is, yeah.
So
you're talking about fragmentation across regulation and cross-border transactions, which obviously historically in the TradFi world is how people have transacted for ages. The localization of your entity, say the UK, is where you get your licensing. And obviously people have gravitated towards what they call the premier regulators. Historically, what we've seen recently in crypto and the digital world is people want to move at the speed of light, pay no tax, operate in a non-regulated regime, the speed of development, and then we see failures. And now I think it's fair to say that most companies recognize that your make or break is your reputation. And so there is a desire to be licensed in a major regime, but politics is still playing a huge amount.
Yeah, and it's interesting. You mentioned like the likes of the UAE in that earlier on, where they're very regulatory friendly and innovative around crypto, and are clearly trying to steal a march there. You compare that to the UK, where the UK claims to be like on the leading edge and everything, whereas the reality is it's still adopting a risk-averse approach with regulation as opposed to an innovation approach. And then the States, I'm not quite sure where we're up to with the States now, because it seems that a lot of the regulation's being run by Trump doing tweets.
Not really. I mean, you've got the feds and they are diddling around with regulations, and sometimes it's hard to know where they're going. Trump tweets something, that's fine, market reacts and so on, but then it goes back down. There's a lot of people that drive the market specifically using Trump's statements, and it's really the Fed and the SEC that are coming out with the regulations, and we haven't seen a lot come out from the SEC yet.
Though my understanding is the next 6 months will fly past, and then we're supposed to see a proliferation of regulation. With the
they said that before
that's true. But from my personal position, I felt that Trump has lit a fire. How big that inferno is going to become, and is the US vying to be, the number one regime and challenge UAE?
I don't think they understand the UAE at all. That's one of the problems, is that the advisors that they have on board at the SEC are not world experienced. They may have been.
Well, I've worked in many American banks. I've been responsible for some serious businesses in the UK/EU when we obviously were a member of the EU, and then Brexit came in. But my overarching experience is that there's the European world and the interaction of business globally, particularly with Asia, etc. But there's a very different regulatory model, even though you transact with the US. and that's historical. So to your point, the regulators would have to significantly change a mindset because America thinks it's the only country in the world, particularly when it comes to regulation.
Yeah.
And it also significantly lags best practices. I think the Europe and the UK, taking money laundering as the example, which I've been involved with now, dare I say it, for 30 years, it hasn't.
I think, sorry, you mean the regulation and control of it?
Yes,
just the avoidance of just the avoidance of doubt.
I forgive because obviously I'm new to you guys, but exactly. But the methods that have developed, the US still has its regulation and has developed regulation across that subject matter, but the reality was it was significantly behind the rest of the world. And over 30 years, you could probably argue, has come round to a similar regime, but it also has some differences that, if you're not used to it, are quite surprising. And I don't see that ever changing because that's just the way the US is, unless digital changes the world. But let's see.
You're probably very correct in that. I've been here long enough and I've worked around the world to recognize the differences. But the way the thinking is here is very, very straight, in their mind, just as it is in the UK, where you have risk-averse people. I mean, look at, I won't go on to it again, but venture capitalists raising funds in the UK is, you may as well shoot yourself in the foot.
It is very much risk averse rather than innovation pros.
They're accountants. They're accountants. Show me this, show me that. I mean, if we had to rely on the UK for innovation, we'd all be dead.
Well, the other thing as well, I've long held this belief, and you can shoot me down on this one if you want, around the entrepreneurial spirit as well and regulation. That there are some countries where entrepreneurs basically do whatever they can do, providing it's not illegal, versus some countries where they'll only do things where it is legal. And that might sound a little bit strange kind of thing, but I've seen it in some countries where they're highly innovative simply because they're trying things that haven't been explicitly made illegal in some way. So at one point, India was kind of going towards that. And now they've flipped back again, and now they're just waiting for crypto regulation to kick in, which is now several years overdue. But I've seen it in TradFi. It tends to be, US companies tend to play by the ball, I think, in regulatory space. But in crypto, it was a bit more Wild West for a while.
I would say that one major distinction, and it comes down to money, is that if you fall foul of the US regulator, you can expect a multi-million-dollar fine. If you fall foul of the FCA, how big is it going to be? £100,000, £200,000 fine in the UK is quite large. You're now seeing, JP Morgan was recently fined, I think it was 45 million euro, but a lot of the that was for money laundering failings 2021. So it's taken 4 years of investigation to find them. But a lot of the articles were saying by journalists that JP Morgan got a 45 million fine, but some of the German banks didn't even get looked at, which is rare that the European regulators, or not rare, but it's becoming more commonplace, whereas the American regulators, if you're fined, it's normally substantial. So again, there's a cultural difference, but my view is the development of digital is vying against the establishment. So if you've got a well-established regime and they don't understand it, the barriers come up. If you're in Africa and you're desperate and you haven't even got a bank, then digital's the answer. Which one moves fastest?
And I've seen that in conversation with people who've worked with the likes of the Bank of England, where when you start talking about cryptocurrency, even just in the wider sense, and they go, well, it's not backed by anything, is it? And you go, well, that's the same as fiat currency, you know. And you have this debate and discussion for a while. But for a while, I just didn't get it. It's all, you know, ultimately, all money systems are based on trust and belief that your government's going to back things up. And as we've seen in many countries with hyperinflation, that doesn't always work. So, Raymond, just changed the topic slightly then. Is there anything in particular where you come along tonight and you thought, I'd be interested in knowing about anything in particular or anything?
No, I'm just a blank page, so I will be a sponge.
Excellent. That's good. Well, if anything does crop up, because these sessions, I find them quite fascinating. I've been running these for, I think it's over 3 years now. And some of the conversations and rabbit holes we go down at times are quite fascinating. I've probably learned more about the traditional financial system through these conversations than I have about crypto. And some of the best stuff as well. Elena's a great example of this, of asking really basic questions, which always makes you wake up to something that you've been into for several years. And someone says something that they feel is really, really dumb, but actually is really, really profoundly good. But I got that once. So I was presenting at an event where we were talking about Bitcoin, for example, and how that, you know, there's only ever going to be 21 million Bitcoin and all this kind of stuff. And then someone said to me, yeah, but Bitcoin at the moment is at $60,000, which kind of gives an idea of how long ago it was. She said, I can't afford one of those. And that's where the penny drops, and you go, I haven't actually explained that you can buy a portion of Bitcoin.
Yeah.
In fact, you can buy down to like 100 millionth of a Bitcoin in there. So yeah, I love people who've got basic questions because they actually reveal far more interesting stuff.
Well, without hogging the show and you know, laboring on a point, my view is that the TradFi world has some basic principles. The FCA is principle led, outcomes based. I think outcomes regulation is good because it means that you can chart your way through regulation and create a control environment of your choice as long as it works. There's no prescriptive route, which I think in the advance of technology that digital brings should in theory suit everybody. But my firm belief is you can apply principles from the old market, but over time new risks will appear. And yeah, you're quite right. Only the other day I was talking to somebody who said that they were at a meeting pushing forward a digital business. The policy department came in and wanted to block it effectively because they were old fuddy-duddies and said, yeah, but it's crypto. And the innovation licensing area said, but this is exactly what the UK market needs. And that was internally between themselves across two departments, actually in a public meeting with a potential client, as it were. So, you know, there's a lot of politics floating around, not just the innovation versus regulation journey.
I think the other thing that's still something that is lacking is education as well. It's just the general awareness of what some of these things are and how they work. And it's education in both directions as well. I've seen some crypto people who've gone down the route of, hey, this is crypto, regulation doesn't matter type thing. It's like, no, we need to have a conversation about that. You know, regulation still applies with many things. And then,
Gary, I think that's one of the differences between the UK and the US is what Raymond has just said and what you've just said is when you're in the UK, you grow up with a mindset of very narrow, I can try it. If I fail, then I'll go get a job or something like that. In the US, the mindset is if I fail, I've learned something, on to the next thing.
Yep.
And so the innovation quotient is much higher in the US. And that's why, you know, when you're running with crypto, it's like, let's put it out there. Let's do this. Come on, let's get that out there. And then the SEC, that controls the financial markets, basically, a year or two passes and they start to pick up on the fact that we're trading this or doing this, or we've taken this opportunity, boom, boom, boom. Whereas in England, I would be very cautious if I was still there, and I would say, oh, well, we've got to check with the FCA, let's go and talk to them, and oh, it doesn't sound a good idea, no, they've said this, so we'll alter our plans, and just burn through capital for no reason at all.
And in fairness as well, I've known examples of startups who have either gone ahead and tried something and have then had a kind of a cease and desist letter from the FCA to say, please stop doing what you're doing because it may be illegal or it may be in breach of regulations. It's like, well, you can't have a regulator saying, please stop because we think you might be in breach of regulations. You either are or you're not.
Yeah.
And it's kind of curious. So you do get this thing. And occasionally I still see it in the crypto world where you get what I think are known as Dear CEO letters.
Correct.
Where the big companies get letters from the FCA offering guidance and, suggesting you might wish to adopt a prudent risk-based approach on the use of this product or whatever.
There are two documents that even in the TradFi world, I'm shocked how many senior execs aren't really aware of. A, they exist, and B, what they really mean. So there's the market watch letters and the Dear CEOs. And really, I just sell it quite easily to any CEO I've sat in front of or to the businesses that I've been advising, and just say the FCA has done a lot of background work. They've set regulation and people are breaching that regulation, whatever that or those aspects are. So what they instead of going out saying, look, idiots, this is what we want and this is what you're doing and this is where it's wrong, they wrap it up as a Dear CEO or a market watch letter. So basically it just tells you in straight language, if there are 5 things, these are the things that you should be looking at, because these are the 5 things that you're not doing, the market's not doing correctly, and that's what we're looking at. And if we come in and examine you, guess what? It'll be all of those 5 things. We'll give you a year, just build it, and when we come in, you'll pass, or if we know that you've got it, we won't even come in. So, there's a big, in the TradFi world, there's a big gap between the regulatory speak that's out in the public market, the compliance groups in the firms, and then that transfer outside of the business prevention unit flag of a compliance department to trusted and honored people that say to a CEO, just do this and I guarantee you'll do more business. We're here as business enablers, not prevention units. And a lot of the big firms, their compliance groups are still seen as the business prevention unit. So when you've got a regulator wanting X, the compliance department doesn't have a presence within their firm, and the senior management not interested in anything other than profit margins and being innovative themselves, you've got a dislocated firm. And I'm shocked when I did it recently, about 2 years ago, in a firm I won't mention, and the CEO went, well, that makes sense. And I said, the trouble is you've had 2 of these dear CEO letters over 18 months, nearly 2 years. So I suggest we do it overnight, because if they come in, they'll slam you. And that's really, that's the failing, I think, in one respect of the regulators and in the public domain, and that's the failing of the banks on another, as an example.
And it is a shame as well, because it is that regulatory environment that has helped the UK build up its market so much. Plus, historically, I'm sure being the leader of the Commonwealth and various other things in the past has been useful. And certainly the City of London has always been a leading light in that space, with a interesting regulator who's been very protective of the consumer. In fairness, I mean, that is their job.
Well, they have 4 mantras: protecting the consumer, innovation and being competitive as a market, and then market protection. So there's an imbalance in those four quarters. They're not equally proportioned, perhaps.
Mm-hmm. Yeah. And in fairness as well, that the whole regulatory competitive space, that's only recently been introduced, hasn't it? That appeared in the Finance Act of 2024, I think it was, where it's actually called out as an explicit thing now. Of exactly as you say, it was traditionally protection of consumers, avoid systemic risk to the market, and then the introduction of this idea of being regulatory competitive friendly, I think it was, or something. But that's only something that's relatively new, and I think they're still coming to terms with that. So,
well, you see, this is political talk coming back where, Rishi Sunak said he wanted the UK to be the world hub for crypto, as an example, and then we go quiet over a sort of 7 or 8 year period. Mirror now Trump's destruction or reversing of Biden's executive orders, and the Genius Act suddenly arrived. The UAE has been full steam ahead in one direction and one direction only for, as far as I can remember, being interested in digital. But the politics that come into play, right now, I do not know what is going on between Trump and his visits to the UK. Why are we lagging behind? Because a very interesting statement was made. There was a conference, the London Blockchain Conference, 3 weeks ago. And they asked the question, if we've got the UK, the US, Europe, Asia, and the UAEs, the blocks of regulatory domains, what order would you put them in? And everyone, UK last, touch and go between EU, it's always fluffy. Oh, because of the Genius Act, the US has to be a minimum of third. Asia is probably second, but is it now slipping to the US with the rate of speed? But UAE is definitely number one, and it's 2 or 3 steps against the rest of the world. So that's driven by politics and desire. So watch this space with the US. Because the US doesn't, once it gets involved with something, it really shoots along, and it will want to be a dominant force.
Yeah. I think that's not unfair. And we've just been joined by JT as well. I know JT's had some involvement of looking at the UAE and UK and that kind of thing. JT, we're just talking about regulation globally and how the UK compares to other regulators in the crypto domain at the moment.
Is that a laugh? There's no comparison. I mean, there's not much to say apart from I think we lost the boat. That's it. Yeah,
it's interesting.
We missed the boat. We missed the boat, really. I don't see any other way to say it. And there was plenty of people in the UK that were trying to push forward since 2018. We know that.
JP, you have to stop doing this. I'm agreeing with you again.
Okay, go back to silent.
Yeah, the nice thing about these conversations is we often have a wide variety of views, and I can usually rely on Stuart and JT to have not necessarily polar opposite views, but a diverse range, shall we say.
Yeah, I think the US, I think we touched base last week on this, yeah. The US is just going to take off. I mean, there's no doubt, Genius Act, it's done and dusted. There's 3, I think there was already 3 licenses to run stable coins. I think the first one was given to JP Morgan, second one to PayPal. I can't remember who was the third one. So it's there, and now the government is shut down, but they have pretty much the market structure bill ready. So once that's approved, I mean, it's just going to be, I have no doubt, it's going to be ICO 2.0. No doubt whatsoever about that.
I'm just taking a quick look now to see if I can find out what the third one was. But yeah, so for anyone's benefit, the Genius Act is basically around issuing stable coins, isn't it? The whole federal regime around that.
Well, the US seemingly wants to base recovery of the value of the US Treasury bill versus retaining the US dollar as the benchmark by using stablecoin to drive their internal market. And I think they're seeing stablecoin as a way to have a sort of mini revolution in their own economy. Also have a revolution by combating the pressures that are coming in from the rest of the world, be it Russia, China, the BRICS, against that economic profile. So I think stablecoin is going to be extremely important for the US.
I agree, and I think we were talking about it last week about how it's a counter to the whole BRICS impact.
It's much bigger than that, you know. I agree. In the beginning, it's going to be for internal, but the objective is not that. The objective is take over the world. You know, just think about all the technology we use. It's American technology. So Apple, with the Apple phone, reaches instantly 2 billion people around the world. Yeah, and then you have Android. It's made by Google. You know, there's plenty of brands that use it. Again, that reaches another 3 billion people around the world. So anyone being able to create a stable coin in the US, I think the only reservation is the big tech giants, if I'm not mistaken. There's something I can't remember, but
it's
I read
restricted
somewhere.
to financial institutions. It's either a bank or a financial institution. I think you find that.
Anyone that has that capability, you know. So
couldn't Apple just buy a bank? And it's then got licenses.
There's so many small banks, and there's more into the Genius Act than that. It's not just banks that can. Yeah. So how you frame financial institutions is certain type of licenses that you need to have. You know, custodial, blah blah blah, all of those things. AML. There's plenty of things that you need to fit within that, and then you are classified as a financial institution, right? So. They'll. I mean, all of these big giants, if they don't have a partnership, they have a proxy. They will. I don't know if they can buy a bank or not. You know, there's some specific laws in the US, but definitely it'll be a vehicle for delivery of all of those hundreds of thousands of stablecoins that are going to appear all over the place. You know.
Yeah. And maybe that's where the US will then start accelerating more with crypto.
What do we consider to be a stable coin? One that it loses its value with fiat as it's pegged?
I think the way the US is thinking of it is it's stabilized against the US dollar.
No, it could be against a basket of currencies, but you've still got inflation. And so stable coins will eventually get to zero.
Well, isn't
a stable coin? A stable coin. Let's go back to principles. Okay, stable coin is a coin that doesn't have volatility. Okay, like a Bitcoin, Ethereum, whatever. Yeah, that's why it's called a stable coin. Yeah. Now,
no, it's usually tied to a currency.
A currency. That's what I was going to say. Then it's tied to a currency. That currency is the dollar. Yeah. In a lot of places, there's stable coins. You know, with euro, there's stable coins backed by gold, you name it, yes. But in the end, it translates always to the dollar, or to the euro, or to whatever currency. Yeah, like from what I've seen is 99% are basically to the dollar. Okay, and it's going to continue. So the discussion then is. Will the dollar become more relevant or not? And my view is the Genius Act was genius because with all the American tech being what majority of people around the world use, then the delivery mechanism for all of those stable coins is on the tech. You know, it's a mobile Apple phone, it's a Samsung phone, it's whatever. Yeah, your laptop, that is Apple laptop, doesn't matter. Then the US dollar becomes relevant again.
Correct.
Because all of these hundreds of stable coins being delivered through through all the American tech. So I don't see any devaluation on that. But that's a much bigger picture than that. The bigger picture comes when the market structure bill is going to be approved. Okay, that changes completely everything.
So I'm assuming that when we're talking stable coins, we're not going to include algorithmically based stable coins.
Correct.
Yeah.
Yeah, I mean, the Genius Act basically says you've got 100% reserve backing in safe liquid assets like US dollars or US short-term treasuries.
Right.
And then it prohibits the stablecoin issuers from paying interest or yield and things like that. Which I'm not sure why they did that, but maybe it was for consumer protection, I don't know. And it also has the Anti-Money Laundering Act, AML, in there, plus sanctions and so on. And it gives the regulators in the US what they call extraterritorial reach, meaning that they can come and get you anywhere in the world.
So that's kind of the same as it is at the moment with the US dollar, isn't it? That any company that trades in US dollars and pays for things in US dollars, it falls within the FBI scope or US Treasury scope.
Right. Even if you're not touching the US,
yeah,
you're not located there or anything. Yeah.
Yep. Yeah. Oh, interesting stuff. Okay, only got a few minutes left. We kind of flown by on that. Quite an interesting discussion. Any other questions or comments or any other news? JT normally throws in right at the last minute a really good one of, has anyone seen?
JP Morgan buying Bitcoin was a big thing this week.
Or is that this week? Or is that as backing for the ETF product or something?
I don't know. I just saw, because I went to the SALT conference in London, and so I was out for a few days, so everything else. And someone told me there that JP Morgan just bought like 300 million or something like that in Bitcoin.
Yeah. Oh. I think that's the other thing, that there's definitely the traditional TradFi world is making investments in crypto and everything. Whether that's just for them to try out or build up a position or what, I don't know.
Well, no, I've got an insight. The TradFi world has kept silent because they're frightened. And that probably has put some pressure on the FCA to be protectionists against, shall we say, the country barrier boundaries, which slows up regulation. But the banks have been working away. And I've met 2 or 3 people who've now got 5-year careers in JP Morgan, Standard as examples, where they've been tinkering and playing, and they've been looking at their own coins. They've been looking at understanding from a regulatory firm's position of how digital can be taken into the firm, the risks that apply, and how that would have to be rejigged to run through their legal entity risk structure, maybe even create standalone legal entities, etc. But they've been playing in their own sandbox, and I think they've been quietly talking to regulators. So don't worry about the banks. The banks are lining up. And at the London Blockchain Conference, again, 3 weeks ago, right at the end, the guy that arranged it stood up and he said, there's one big difference this year, that the suits are in the audience. So that meant the banks were listening in public. What that actually translates to, that's a different thing. But the forces of those balance sheets are going to come out, and digital assets, and whether it's a currency, is it a security, is it an asset that can go on the balance sheet? How do we manage payment vehicles for retail clients versus institutional clients? They're looking at all of that because they're worried that traditional banking could rapidly become a thing of the past.
Yeah. And I think probably to close that off, having been to a number of conferences over the years as well, there's another reason the suits are in the audience, and it's that they're looking for jobs.
Oh, yeah, that's me. Well, I moved to the digital world where it's been nearly 3 years ago. So,
but I know a lot of events I go to in London where it's people who currently work for some of the big names that we may talk about, and they're all looking at making the hop because they can see that crypto and digital is the future, and they want to be part of it. So that's good. All right, well, folks, on that basis, we are just about on the hour. I like to close these off on time. But hopefully you've all found that interesting. And Stuart, you didn't quite swallow whatever I said that a moment ago. But thanks everyone for joining today. Really interesting conversation. Raymond, I hope that was worthwhile. You coming along? Do come again.
Yeah, no, definitely. I understand it's every fortnight you're on them.
Every Sunday, generally.
Oh, every Sunday.
Yeah,
right.
Every week, 7 p.m. till 8 p.m.
As and when I'll be dialing in.
Yeah, excellent. All right, in that case, wish everyone well. Have a great week.
Pleasure to meet you all. Bye-bye.
Cheers. Bye for now.